Hello investors, welcome to Simpli Stocks. June first quarter earnings season has started and companies have started releasing their business updates. As usual, several companies from our watch list have announced excellent updates. So in today's video, I'll talk about all the good business updates that have come out recently in the June quarter. And this earnings season is going to be very important because see, the war has de-escalated to a large extent. Now from here we will get to know how different businesses can perform from here onwards. Therefore this earning season will be a very good time to get your portfolio in order, or let us say to get it ready for the upcoming bull run. And that is why if you are a serious investor, you can subscribe to our channel. My name is Vikalp Mishra and I am a SEBI registered research analyst. On my Simpli Stocks channel, I cover good businesses and also trending sectors on a regular basis. So in today's video, we will look at some of the businesses from retail, jewelry, EV, banking, and also NBFC sectors. Those updates, whose updates have been strong. And then when the results start coming out in a short while, I'll be analyzing those as well for you. Like during the previous Q4 March quarter earnings season, I brought in-depth coverage of more than 50 businesses for our YouTube family. But yes, as a standard disclaimer, none of these businesses are buy or sell recommendations. You need to keep that in mind. The mindset here is that you get a good understanding what is happening in these businesses. With that, let's get started. Now, the first business that has reported very good updates is Ather Energy. Ather sold more than 31,100 EV two-wheelers in the month of June, which is an excellent 115% growth compared to the last year. And if we consider the entire Q1, meaning the total of 3 months from April to June, they have sold more than 88,300 scooters. Now, in this, Ather has also benefited a bit from the rumors that spread around petrol shortage because of the war. So that is there. And in Q1 of last year, they had sold nearly half of this volume, around 46,000 scooters. So a tremendous growth of about 92% has come on a YOY basis for the whole quarter. And because of this, I think there is a high chance that Ather will become profitable at EBITDA level this quarter. This is because if you look at previous quarter 4 numbers, they recorded a negative EBITDA margin of just minus 2.5% on 83,400 approx volumes. On top of that, they have achieved 6% quarter-on-quarter growth. And you will see gross margins have also improved. As production increased, the company is getting benefit of economies of scale. Basically, the cost of producing every incremental unit that has been coming down for Ather. So the EBITDA margin, which was minus 16% in Q1 FY26 last year, has improved to minus 2.5% in Q4. And from here, the volume growth that has come will probably help Ather to close this EBITDA gap which we are looking at. So most likely we can expect EBITDA to break even for Ather in this quarter. And the Delhi government's new EV policy is an additional interesting long-term trigger in itself. So Ather will also get a massive benefit from it. After Ola's exit, there are now mainly 3 EV players left in the market: Bajaj, TVS and Ather. To some extent, Hero is also there via Vida. And I personally think that India is sufficiently a big market that all 3 can coexist and all 3 can do well together. So this loss to profit journey that is happening for Ather, so such stories create a lot of value. So you can study this business independently once interesting things are happening over here. Now moving forward, the second business on our list is Zota Healthcare. Zota runs pharmacies or medical stores across the country for specifically generic medicines, and they run these pharmacies under the name Dawa India. They are moving in the right direction according to their guidance. Like this quarter, they have opened 264 new Dawa India stores and also closed around 18 stores. So on a net basis, now they have a total of more than 2,800 medical stores across the country. Now the management had given a target of about opening 500 to 700 700 new stores for this year. And you will see that in the very first quarter of the year, they have achieved almost, let us say, half or one third of their target. They had also stated that they want to slow down on expansion a bit in Q2 and they want to focus on the profitability. Like last year, they opened about 1000 stores, and this year, slowing down speed a bit, they will be adding 500 to 700 stores. But I think this is just for this year, whatever their plans are. I think that most likely they are going to do a major fundraise in the future, for, let's say, for future growth. And for this reason, they want to show a little bit of net profit, maybe better unit economics, and they want to command a better valuation. But anyways, this is a good business model. You must have seen their stores too yourself. So Zota is gaining market share very rapidly, and I can say that actually maybe they are creating market for generics in India. And many people who were previously, let's say, not comfortable with losses in Zota, so they can now also look at this business as management is emphasizing on profitability. Now, after Zota, if we look at micro cap space, there is a business by the name of GSM Foils we track. So it has also given a very good update. GSM manufactures such foils for pharma companies that are used for packaging of medicines. Now, their sales for the month of June stood at 35 crore, which is a 93% growth compared to last year's figure of 18 crore. And if we look at the entire Q1 numbers, the sales are totaling to 97 crore rupees, which translates into very fine 86% year-on-year growth. And this is much, much higher than what management had guided. So they gave a growth guidance of 55 to 75% for this year. And let us say, even if we take an estimate of the upper limit of 75%, it means that out of the guided 450 crore in sales, GSM has achieved about 97 CR, or so to say about 100 CR in Q1 only. So this is good progress. And I have always been telling you that despite being an SME, this company maintains very good communication for investors. So overall, corporate governance wise, it is a very good business. However, due to the war, the prices of everything from aluminium to many chemicals used in their business, so those have increased. And due to this volatility, some pressure will definitely be seen on their margins. And I had discussed this with you in the Q4 results analysis as well a few days ago. But yes, we are seeing that war is de-escalating, or let's say it has de-escalated to a large extent. So I feel the pain in margins should last for maybe just 1 or 2, max to max 2 quarters more. And after that, they should come back to normalized margins. Now, updates from jewelry sector have also started coming. Let us talk about them. So, Senco is here in front of us. So, Senco's retail sales grew by 48% compared to the last year. Their SSG, meaning same store sales growth, was also good at 38%, which tells us that overall demand for gold has remained strong. And perhaps, who knows, that bulk buying is happening as gold prices fell. And the customs duty imposed by the government, that has not resulted in any such loss of business. But I will say, do not get excited all of a sudden just by looking at Senco's top line growth and low PE ratio, because last year they got the benefit of 2 to 3% in margins because of the inventory gain. Now let me take 1 minute of yours to explain this in detail, because that is important. So in the jewelry sector, the concept of hedging applies, as in what percentage of your inventory is hedged. Good companies usually keep most of their inventory hedged because you never know when the price of gold might drop, right? So you want to protect against that commodity volatility. But what Senco used to do was, unlike other jewelers in the market, they did not hedge their inventory that much. Like last year, they benefited from the gold rally. They recorded a very good inventory gains as bullion rallied. But their strategy has actually backfired because gold corrected so suddenly. As a result, there will be pressure on margins this quarter. And I had highlighted this risk in our previous update as well, last Q4 update for Senco. So on a standalone basis, yes, Senco's numbers look good, but they tell us, what they tell us is actually that is their only job, that they tell us that sector is doing well, no problem over there. But yes, they are not good enough that Senco in itself becomes an opportunity for us. So that should be clear. And because Kalyan and Thangamile maintain high hedging ratios, so these companies will actually get the benefit of inventory gains as a result from from the customs duty. So that is something we have to watch out for. So that will be interesting trigger. Now, apart from that, PCJ's update update has been disappointing. Their sales have grown by just 21%. Like, yes, they had been reducing debt, but that is all right. Now you need to start bringing growth. You need to, let us say, start opening new stores, but that is not happening in front of us. Yes, so that 21% top line growth is there, but see, year on year basis, the price of gold itself has gone up more than this. And besides, even Senco's SSG number was also strong. So all in all, PCJ's performance is, I'll say, indeed disappointing when we compare it to industry peers. Now, a humble request: if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simply Stocks, where we bring multiple such videos every week, because honestly, your likes and subscribes are our only motivation, so that we keep bringing such high quality research to you for free. So do like this video, and yes, also subscribe to our channel. Anyway, let us get back to our business updates. Now, just like every time, V2 Retail's Q1 business update has also come out good. Their sales stood at approx 1000 crore rupees, which translates into massive 58% year-on-year growth. Here you will see that their SSG growth was 7.5%, and this time too, just like before, conversations, or let us say, even word wars are happening over V2's SSG. Now let us talk about that for a moment. So same store sales growth, or SSG, remained lower than expectations. Like last quarter, this was the problem as well. SSG means how much sales of old stores. So they have how much, how much they have grown. And understand it this way, that sales coming from opening new stores, those are separate. But how the old stores are performing, that tells us what is the standing of the business in the market. So regarding this, a lot of narratives are being built. The management says that the new stores that are being opened rapidly, they are pulling down the SSG at the consolidated level. On the other side, a counter argument to this is that also new stores actually have a smaller base. So conversely, higher SSG or sales velocity should be visible there, like just how we see in Zota. So now up to you which argument you want to adopt. But yes, I was looking at the update of Bazaar Style as well. So their SSG stood at 7%. So I will say it can also be that there is somewhat a short-term slowdown across the entire sector. But I will say personally, I do not have any problem with this 7.5% SSG. The management is doing quite well, and I am comfortable giving management a little bit more time. And now I have not made any changes to my own position. And apart from it, if we look at their store count, so they have opened about 57 new stores in Q1. They can easily achieve the target of 200 new stores for the year at this pace. V2 now has a total of 381 stores across the country, and at this rate, by the time the year ends, there will be 525 stores, or who knows, even 550 stores. So overall, I'll say a good update. Now, the next two businesses on our list are banks, CSB Bank and Jammu and Kashmir Bank. Both CSB and J&K Bank are doing quite well. But first, let us look at CSB, then we will move to J&K. Now, in Q1, CSB's gross advances, meaning the total loans they have, which they have given, increased by 24% compared to the last year. And a very healthy 47% year-on-year growth was actually seen in gold loans as well. So that is a segment that has continued to do well for them. And if we look at deposits, there is also very healthy 26% year-on-year growth here. Now, though the gold prices has indeed cooled down a bit, let's say from the peak, but if you look at the rally that took place over the last 2 to 3 years, so that is benefiting the gold lending companies, because customers are able to get a bigger loan by pledging the same amount of the gold now. So there is a huge tailwind in the entire sector. You will see from Poonawalla to Capri Global, all lenders are opening gold branches very rapidly. Like today, I went to my banker for some work. So there I was seeing they have dedicated a separate kiosk for gold loans. So that is happening. That whole tailwind is there. However, CSB is under a bit of pressure because the market wants to see how their asset quality turns out in Q1. So that is something we need to track. And whether the recent slight correction in gold had any impact, that event had any impact on LTV or loan to value ratio or not. So that is what market wants to see. But overall, you will see CSB Bank is currently trading at a PB ratio of around 1.25. And it is, I will say, among those very few banks that are growing fast. So you can look into it independently. Similarly, let us look at the numbers for J&K Bank. So J&K has surprised everyone with its turnaround recently. I had started tracking J&K Bank nearly 1 year ago when Mukul Agarwal made an entry into it. At that time, it was getting the benefit of right-of reversal gains. And then after that, its growth has also accelerated. Like you will notice this here too, that their gross advances grew by 26% to cross 1,30,000 crore rupees. A growth of nearly 17% was seen in total deposits. So there has been a small point of concern around their CASA ratio and also this lower growth in deposits. Like CASA, it was 45.7%, and now it has dropped to 42%, and it had been declining. So a decline of 363 BPS was seen. So this is still, I will say, better than industry average. So that is there, and management has also kept saying that this will not affect their margins. But we have to see for ourselves how the cost of funds and the margins behave going forward, and how the deposits growth that is stacked up. But yes, as a turnaround story, this bank was struggling with heavy NPAs at one point. But now not only the asset quality has improved, but the growth in advances is at 25% plus right now. And due to the development projects that are happening and also rising tourism in the Union Territory region, so overall corporate and retail credit demand is high. It is coming in strong for J&K Bank. So that is how the bank is benefiting. And even though it has rallied quite well, it is still attractive growth and valuation wise both. So you can look into this independently as well. Now, since banks are being discussed, let us also look at two NBFCs as 8th and 9th stocks. So Credit Access Grameen has announced a good update in the microfinance space. And similarly, SG Finserv also gave a good update in the MSME segment. First, let us look at Credit Access Grameen. And you would remember I told you this in the previous video regarding Arman as well, that a recovery is now playing out or happening in the microfinance industry. So this is a cyclical sector. Lenders are recovering from the previous down cycle and they are doing quite well. And you just have to play the cycle right here. If you are able to play the cycle properly, you will be able to create a lot of value. So that is how attractive this sector in itself is. Now, looking at Credit Access Grameen's number. So in here, you will see that their loan portfolio grew by 16.4% year on year to cross 30,300 crore rupees. And then there is also 2.5% improvement quarter on quarter. They have given new loans worth more than 6,100 crore rupees in Q1. And even though this might look lower to you compared to the previous quarter, Q4, so Q1 is actually always seasonally weak for lending companies or the financial sector. But if you look at it on YOY basis, a growth of nearly 12% has come. Similarly, asset quality has improved and become stable, and it is not written here, but there is a very good improvement in the PAR 90 plus buckets as well. So we can say Credit Access has completely recovered from the stress, and from this year we have to see how rapidly they can grow their loan book from here. All microfinance lenders have started expanding their loan books rapidly again. Like I was looking at updates of Ujjivan and Suryodaya small finance banks as well. So Suryodaya's total loans and also new loans both have grown 30% plus year on year. Similarly, growth has also returned in Ujjivan too. So this whole sector is booming again. Now, next, SG Finserv's update has also been extremely strong, and this is an interesting business model among NBFCs. First, let us look at the update, then we will talk about what it does. So, in the months of April to June, here you will see that their total AUM grew by 82% and it has increased by nearly 16% compared to the previous quarter. Last year's base was small. They had to contract their loan book due to RBI restrictions. But see, even if you analyze this 16% quarterly growth, so it still translates into 64 to 65% growth. Whereas the management's guidance was to grow at 35% CAGR for this year and then 30% CAGR in the long term. So yes, a very good and healthy update. And some time back, yes, when the management changed, there were some doubts. But the new management has also been performing very well and they have also delivered. Now, talking about the business, SG Finserv is in the supply chain financing. It provides working capital loans to the vendors and suppliers of large and established corporates like Tata and Adani. And to be precise, for example, it discounts the bills that Tata Motors or APL Apollo issue to their suppliers and gives the money to the suppliers. and then later they fully recover the money that is supposed to come from the corporates. So in this, your NPAs are nearly zero, because big names like Tata or Adani, they will never default on their loans, right? They will always pay on time. So this model is quite good, and they are growing fast on a small base, so you can look into this business independently. Now lastly, our 10th and final business for today is AU Small Finance Bank. I have started tracking AU closely quite recently. Their Q1 update was also very good. The gross loan book increased by 22.6% year on year, and total deposits also saw nearly the same growth of 23.5%. And quarter on quarter as well, you will see the balance sheet grew by 3% plus. So overall, a nice update. Now, in the end, I'll say if you enjoyed this video, please make sure to like it. Along with that, you can also subscribe to our channel Simpli Stocks, because see, the earning season has just started, and in the coming days I'll be bringing commentary on many such good businesses for you. So don't forget to subscribe to the channel. You'll keep getting updates. With this, I'll see you in the next video. Happy investing.